everybody. My name is Brad Muniz. I'm a partner at Sobel & Company, and I would like to welcome you to Sobel Insights. Sobel Insights is a weekly seminar series where we like to provide some brief information on various topics. At this point, we don't provide CPE for the sessions. If we move into the nano CPE area, we will start providing CPE. If you have any ideas on topics or speakers, feel free to email me. You'll see my email at the end of the presentation. Today, I asked to come and speak on some certain tax topics is Deirdre Wheatley-Liss. Deirdre and I have known each other for many, many years in many previous lives, and she's always given some great consultation. I do recommend you listen to some of the great comments that she's going to have and reach out to her if you have questions, and she could absolutely provide you with advice. So much so that recently Deirdre and another person and I did a presentation on mergers and acquisitions, and she hit on so many good topics. I wanted to bring her back and just kind of hit on a couple more merger and acquisition and other tax topics. So Deirdre, in a merger and acquisition situation, when are you usually brought in, and when should you be brought into the situation?
That's a great question, Brad. Thank you. So I usually represent the sellers in these types of situations. And there's a bunch of different points. And I understand the sellers don't want to expend a lot of money on a transaction that isn't going to happen. But let me tell you where you can get value by actually speaking to your attorney at certain points. The first is, when you're just thinking about it, have an overall discussion. There may be tax savings opportunities, either by restructuring your organization. Maybe you're an LLC, would be better if you were a corporation. Maybe doing some wealth transfer planning while the value of the business is low, transferring some of the assets out to the family. And very particularly understanding the due diligence process. That's the process where somebody else is examining in minute detail every aspect of your business, because there's many things you can do to sort of clean that up in advance if you know what the due diligence process is. So as an example, when we speak to sellers who are considering these things, not only do we say, here are some tax things that you should consider, but here is a sample due diligence checklist. Somebody's going to be asking you for all of this. Do you have the ability to provide it?
That is great. The due diligence checklist, I don't think that enough people have a copy of that. And when they get it and they have to live through a due diligence process, it's a rude awakening. And I strongly recommend, Deirdre, it's a great idea for them to get a due diligence checklist and start seeing what is going to happen during that.
Absolutely. So now you've done that. You're working on your internal due diligence. Maybe we've put some tax structuring in place so we can save you some money on the eventual sale from how much Uncle Sam or Governor Murphy, if you're in New Jersey, or Governor Cuomo in New York, are going to be taking out of your pocket. Maybe you're looking at an investment banker. Okay. You need to have an attorney review that contract so that you understand where the payouts are going to come from. Are they just out of the purchase price? Are they out of the purchase price and the earnouts? How much is this going to cost you for the services that you're going to be getting? From my perspective as an attorney, it's very important that the investment banker is going to do some of the overlap services, either for the accounting team or for the legal team, because since they tend to get paid as a percentage of what the sale is, that cost is already sunk, whereas you as an accounting professional and myself as an attorney can focus just on our areas, and they can essentially do some of the hand holding and get the client through some of the due diligence aspects.
Oh, that's great. So I was talking with a client recently about who's thinking about selling their business, and they're not even anywhere close to the process. I mean, I keep telling them, you've got to start planning, and every day they wait, they're wasting their time planning. But trying to explain to them the difference between a stock sale and an asset sale. From a tax aspect, is there a significant difference in those two?
Yeah, huge aspect. So an asset sale, you're selling each asset of your company. Some of the assets that you're selling of the company are going to be at ordinary income tax rates. A big thing would be inventory and accounts receivable. Okay. So if you sell the company, and let's say that 50% of the value of your company is inventory and accounts receivable, then 50% of the sales price is going to be ordinary income, 37% plus, assuming it's over $1 million, 10.75% to the great state of New Jersey. With a stock transaction, you're paying a capital gains rate, which are currently 20%. That is a huge differential number. And this goes back to one of the questions that you asked before. When do you bring in the attorney? Before you sign the letter of intent. Okay. You need to understand from the language that's in the letter of intent, are you agreeing to an asset sale or to a stock sale? You then need to sit down with the team over at Sobel and say, okay, one versus the other, how much is it going to cost me? Because before you sign the LOI, you want to go back to the buyer and say, all right, this is going to cost me another, $480,000. I want you to add that to the purchase price for me, or we'll split the difference or whatever. But once the LOI is signed, the opportunity to make that modification goes away.
And that's what, talking with the client recently, and they kept saying, oh, we need to sell it for X. And I said, well, I need to know what the net number that you're looking for, because I can put the model together, but if you tell me you want to sell it for X, you may not get that in the end. So I need to know your net number, what you're anticipating. And then we can figure out if we can get there.
Yeah, and I just want to make another point on that, because one of the things that I think that owners need to understand also is a lot of owners run a lot of what I'm going to call personal expenses through their businesses. When you do that, you're paying basically 70 cents for that expense, because it is a business expense. Okay. If you own a restaurant business, you eat at other restaurants, you're doing market research. We all understand that. But once you sell the company, you have to now pay for those expenses out of pocket, which are going to be more expensive for you. So to build onto your point, once you, Brad, are able to say to them, here's your net to pocket number, the question is then not what am I getting paid, but can I live off of my net to pocket number? Is that enough for me?
Right. And look at your age, look at your life expectancy, see almost, and is this going to carry you to the finish line?
Absolutely. Because if not, it doesn't matter what the top line number is. It only matters what you're putting in your pocket at the end of the day.
Exactly. So if there was a common mistake that that sellers or buyers make, what would you say it would be for people to avoid?
Yeah, so I think it goes back. So some of it comes under the category of just not having some understanding of some of the things that go into how is a business valued for sale. And the other goes back to due diligence. So let me just talk about that first. From a due diligence standpoint, if you were to get your due diligence checklist 2 years in advance and start to go through it, there are things that you can do that as a part of your natural business that will actually increase the value of your business. As an example, if you're doing an asset sale and you have lots of contracts with customers, in order for the buyer to get those contracts, they need to be assigned to them. If the contract has an assignability provision, I can assign it to whoever I want to, great, the buyer can get those. If there is not an assignability provision and the customer balks at signing for whatever reason, you're not going to get paid on that contract. And instead of figuring that out 15 days before you're closing, if you figure that out in advance, as you do your annual contracts, you can just change the language on page 7 with the assignability provision. So it's sort of thinking in advance like that. The same comment for employment agreements and independent contractor agreements. In your employment agreements and independent contractors, have they assigned all the work that they do to the company? Do they have a non-disclosure agreement? Is there more value there to what they're doing? If you want to bonus as employees at sale, is there something in the agreement that's pre-existing about that? So we're not trying to figure out what to do at the end of the day. Compliance. Are your exempt employees really exempt? Are your non-exempt non-exempt? Are your independent contractors employees, or are they really independent contractors? This is a huge issue which can significantly change, derail, or kill a transaction. And in advance, if you go through and look at that, you can clean up those issues before doing it. And then the last thing, I think that's really important is just understanding, to your point, you're saying, I need to go through and see what you're going to be getting. There's certain things that are going to be in the agreement. Net working capital. This is money that you have to leave on the table because this is what it costs to operate your business. Okay. Right. GAAP. Are you doing things in accordance with GAAP? Because if you're telling the buyer that you are, and you aren't actually doing that because you never actually had the conversation, you may not be in a business that needs to do that, is that then going to change the financials? So I think it's getting the team around you in advance. And it's not that the accountant and the attorney have to be there every step of the negotiation, but before you get to a decision-making point, you need to understand what you're saying that you're going to do, and if you can do it legally. Do you have the assignment provision? And to your point, what are you going to get in your pocket at the end of the day?
Right, great. So moving away from mergers and acquisitions, there's been a lot of crazy things going on with the taxes. forget about New Jersey. I'll put that aside. We'll just even talk federal. As a tax attorney, what is concerning you most about the most recent tax changes?
So, first of all, President Biden just instituted the largest tax decrease is in like 25 years because of the child care credits that were instituted. That's not going to be what happens with the next round of taxation. We all know that the government has spent 4 to 5 trillion unbudgeted dollars as a result of COVID. We all also understand that there is one way that the government makes revenue, and that is through collecting on taxes. And there will be a tax bill coming down the road. Here's a couple of concerns that I have from what I've read about some of the proposals. In the desire to get more money from the billionaires, attacking people that the amount of money that's reflected that they earn as a business owner isn't really reflective of what goes into their pocket. Okay. So there's this proposal that if you make over $1 million a year, taxable income of $1 million a year, and you have capital gains, that they're going to be at the highest tax rate, which would be 39.6% again. Okay. I would suggest to you that there's a fundamental difference between somebody who is getting stock options from a pharmaceutical company that they can exercise year after year and have a purely liquid market for, having let's call it a bonus tax on those, versus a business owner who's having a once in a lifetime event for something that they've worked their entire life to be able to put together. Brad, you and I both know what a business owner makes is not what necessarily goes in a business owner's pocket. A ton of that money gets taxed to them because it's a pass-through entity, but gets reinvested in the business over and over again. So my second point with that is another thing that they're looking at that I think is very concerning is reinstituting the payroll tax of 14+% on incomes over $400,000. We live in northern New Jersey. We live in the New York City metropolitan area. Our real estate taxes are obnoxious. We have a state income tax. Not all states have a state income tax. And $400,000 just doesn't buy as much in northern New Jersey as it may buy in, I don't know, the middle of Florida. So is it fair then for an additional 14% tax? That is a huge amount of money for people who are making over $400,000 a year, because I would suggest to you that that is well into the middle class range when you're looking here in New Jersey.
Oh, I've seen it. You look at what houses are going for now, what people have to spend on that. My daughter lives out in San Diego, and what the houses are going for there. Any metropolitan area, I hate to say it, I know this is sounding elitist, 400,000 is not a lot when you're trying to survive in the metropolitan areas.
This is for people. So you have 400,000, you're going to have your expenses, but what about retirement someday? What about other things? And I'm not saying that it's not great that you make that, but what I'm saying is that in different areas, $400,000 is a very different amount of money. And I'm concerned that that's not, and look, if it was a 1% tax or a 2% tax, it's 14%. That's a huge, huge number.
Right, right. So that's the changes the changes that they're anticipating. Is there anything else that you want to warn people about? I know that as a tax attorney, I don't know, you've handled estates and trusts in the past, but I know that they're also talking about the estates and trusts being affected.
Yes. So the last thing then is so right now, everybody has an exemption from federal estate taxes of $11.7 million. Hallelujah. If you're married, you have $23 million, you can pass it without tax. They're talking about reducing that amount to $3.5 million and also potentially limiting the gift tax exemption to $1 million. Okay. I'm going to go back with your example of a house. All right. Your daughter's house in the San Diego area, which may not be a huge mansion on 20 acres of property, could have been close to 7 figures just because that's what the housing market is out there. So if they're going to change the estate tax exemption, the Secretary of the Treasury, Janet Yellen, has indicated that in different comments that they probably wouldn't do that mid-year, probably not do it retroactively, but particularly for people who own their own businesses, I would fully expect that that law is going to go into effect for next year to reduce the estate tax exemption from what it is that we've seen. If that's the case, you got until December 31st to be able to get some planning in place. That planning would usually involve getting a valuation of the business, having a trust created, transferring some of the business to the trust. Okay. Well, now you got to get people involved to value your business. You got to get lawyers involved to be able to put all these things together. And I guarantee you, folks, you call your attorney on December 8th of 2021 and the exemptions changing, you're not going to be able to get the work done in time. So plan for that and give some consideration to if there is an opportunity for you to transfer the business, which actually ties in very nicely with my very first point, which is speak to your attorney if you're thinking about selling your business to see if there's some tax planning strategies that you can put in place in advance to increase the amount of money in your pocket.
That is great. That's great information. I didn't even think about that deep with the estates and trusts. I want to thank you. We're right around the 15-minute mark. I want to thank you for the information. You've got a lot of information. I'm going to ask you to come back. Hopefully the viewers will give us some topics that they want to hear about. And I'm sure that you can talk about any of the topics. So thank you again. I want to thank everybody for viewing. We have a lot of other presentations that are up online, including Deirdre's CFO Roundtable. Feel free to go to our website and look for the other presentations. And everybody have a good day.
Thank you, Brad. Everybody have